Welcome back, the channel where we simplify cryptocurrency and finance for real people without the confusing jargon or hype-filled headlines. If you are holding XRP, thinking about investing, or simply trying to understand what's happening in the crypto world right now, you're in the right place. Today's market action has been absolutely intense. We're seeing new spot XRP ETFs launch massive sell-offs across Bitcoin and altcoins, and a major shift in XRP liquidity that could change everything for investors. If you stay with me, by the end of this video, you'll have a clear understanding of what's happening, why it matters, and how to think like a professional rather than just react to market noise. Let's start with the news everyone has been talking about. 21 Shares launched a new spot XRP ETF today. With this launch, there are now 5 spot XRP ETFs live on the market, which is a huge milestone for institutional adoption. These ETFs provide investors with a regulated and safer way to get exposure to XRP without buying it directly from exchanges. Even though this new ETF, ticker symbol TOXR, is currently on a smaller exchange, it signals the growing institutional interest in XRP. This kind of adoption is exactly what moves markets in the long term. And today, we're going to break down why this is so important and what it means for your portfolio. While this is happening, the broader crypto market is experiencing a sharp decline. Bitcoin dropped roughly 6 to 8% in just a few hours, trading in the mid-80,000 range after dipping briefly between 83,000 and 85,000. Ethereum was down 7 to 10%, trading around 2,700 to 2,800. Even XRP and other major altcoins faced single-digit to low double-digit losses. This may feel alarming if you are used to only watching price charts, but there's a method behind the madness. Large institutional investors and automated systems, not just retail, traders are responsible for much of this selling. Wintermute dumped 9,300 BTC, Coinbase AU 300 BTC, BitMEX 8,000 BTC, and Binance 5,400 BTC. These were strategic moves often triggered by leveraged positions being liquidated, not panic selling from regular traders. Understanding this is key to staying calm during volatility. Leverage in crypto trading amplifies both gains and losses. When markets move against highly leveraged positions, automatic sell-offs occur, which can cascade across multiple exchanges, creating sharp drops. In today's session alone, between 600 and 650 million in leverage positions were wiped out. That's a huge number, but it's also an important part of market mechanics. This is what many people call a flush. It might look like chaos, but it's actually resetting the market. Experienced traders understand that after leverage is flushed, a stronger foundation is often set for the next upward move. Panic and fear usually dominate headlines, but professionals see this as an opportunity to accumulate quality assets at better prices. Now let's focus on XRP specifically. Even during today's market turbulence, spot XRP ETFs are seeing strong volume inflows. Within the first 30 minutes, combined trading from Franklin Templeton, Bitwise, Canary, and Grayscale exceeded $11 million. Within an hour, it rose to over $13 million. And 2 hours in, it was approaching $19 million. By the end of the day, total volume could reach $35 to $40 million, which is significant for an asset that is just entering wider institutional adoption. This shows that while retail traders may panic at falling prices, institutions are strategically entering positions, quietly accumulating XRP for the long term. This is exactly how serious money operates, slowly, deliberately, and with a plan. Another important factor is XRP liquidity on exchanges. Since February 2025, approximately 645 billion XRP has been withdrawn from exchanges, reducing total track supply by nearly 29%. Major U.S. exchanges like Coinbase now hold less than 0.1% of their previous XRP balances. Gemini and other platforms are down over 98%. This means that less XRP is immediately available for purchase on public markets. Reduced exchange supply combined with growing ETF demand creates natural upward pressure on price. Essentially, supply is tightening while demand is starting to rise quietly behind the scenes. International markets tell an equally compelling story. In South Korea, Upit alone holds over 6.18 billion XRP, about 38% of the total tracked exchange supply. Other Korean and Japanese exchanges also show similar patterns, with long-term withdrawals dominating short-term daily flows. What this signals is that whales institutions and retail holders in Asia are quietly positioning themselves for long-term growth, while supply in the U.S. market is becoming scarce. This combination is rare and historically has created strong upward momentum in assets like XRP. Finally, it's important to consider the broader market context. The SEC in the U.S. is actively engaging with major platforms like Coinbase, BlackRock, Robinhood, and Galaxy Digital to discuss tokenization and blockchain integration into the existing financial system. These discussions are focused on regulatory clarity, equity settlement, and infrastructure modernization. Ripple, with its global presence and institutional partnerships, is perfectly positioned to benefit from these regulatory developments. Coupled with ETF launches and supply reduction, XRP is not just a speculative asset anymore. It's becoming a strategic financial instrument. In summary, today's market shows us several critical points. Leverage has been flushed out, creating short-term volatility. XRP ETFs are seeing strong institutional inflows. Exchange liquidity is tightening globally, and regulatory clarity is slowly emerging. When you combine these factors, it's clear that XRP is entering a stage of structural strength that the market has not seen before. This is why investors and analysts alike are paying close attention to these developments, even if daily price action looks chaotic. If you stay informed and focus on long-term fundamentals rather than short-term panic, you position yourself ahead of the crowd. Today's market action shows a clear pattern of institutions quietly accumulating while retail traders react emotionally. Spot XRP ETFs are a perfect example of this. Within the first half an hour, Franklin Templeton, Bitwise, Canary, and Grayscale moved over 11 million combined into XRP. By the end of the first hour, the total was already 13.2 million, and within 2 hours, it reached nearly 19 million. This is not random. Institutions are not chasing hype or trends. They are entering strategically, accumulating positions in a disciplined and calculated way. The volume we are seeing is a strong signal that large players expect XRP to play a central role in the financial ecosystem over the coming years. While most people are panicking about price dips, these inflows are quietly laying the foundation for significant structural support in XRP's market. What makes this even more interesting is the simultaneous drop in exchange liquidity. Since February 2025, more than 645 billion XRP has been removed from major exchanges. That is nearly 29% of the total tracked supply. Coinbase is virtually empty now, holding only 0.07% of its previous XRP balances. Gemini, Bitfinex, and Bitrex show similar patterns, all down over 98%. This reduced availability creates a natural scarcity. When demand exists, but the supply is shrinking, the asset is primed for upward price pressure. These withdrawals are not just random movements. They indicate that large holders, custodians, and institutions are securing XRP for long-term use, rather than leaving it on exchanges to be sold quickly. This is a structural change in market behavior, and it sets the stage for a potential supply shock. The Asian markets, particularly Korea and Japan, also tell a critical story. Upit holds over 6 billion XRP alone, roughly 38% of total exchange supply. Other major Korean exchanges like Bithum, Korbit, and Koinon continue to retain large balances, although they have experienced long-term withdrawals similar to U.S. exchanges. Japanese exchanges such as Cointeek, Bitbank, and SBI have also seen multi-month outflows. The pattern is consistent. Global XRP supply is shifting from exchanges to wallets, custodial solutions, and DeFi platforms. This indicates growing confidence among long-term holders and institutions who are positioning XRP as a strategic asset rather than a speculative coin. Even during this volatility, ETF inflows continued to demonstrate strong institutional confidence. Bitwise moved 245,000 shares today, amounting to over 5.4 million in the first session. The new 21 shares XRP ticker TXR has also officially launched, although on a smaller exchange, SIBO. The initial volume is moderate, but the launch itself signals continued expansion and acceptance of XRP and regulated financial products. Institutional investors now have multiple entry points to gain exposure to XRP, and each new product contributes to a structural strengthening of the market. Another important aspect is that XRP liquidity constraints are creating an environment where price discovery is no longer just about technical analysis. Above 340, the price is largely dictated by structural factors like institutional inflows, ETF volumes, and the movement of XRP off exchanges. Traditional chart patterns and short-term speculation are becoming less relevant as the supply on exchanges continues to shrink. This is a rare scenario for any cryptocurrency, and it positions XRP differently from its peers in terms of long-term market behavior. Finally, these developments must be understood in context. Market sell-offs and daily volatility will continue, but the underlying trend is clear. Institutions are accumulating, supply is decreasing, and regulatory clarity is improving globally. Retail traders may panic during dips, but the long-term structural changes are far more important than short-term price action. Understanding these patterns is key to making informed decisions, and it highlights why XRP is moving into a new phase where fundamentals, not hype, will determine its trajectory. The US SEC is actively meeting with major platforms like Coinbase, BlackRock CK, Robinhood, and Galaxy Digital to discuss tokenization and digital settlement. These conversations are not about banning crypto. They are about integrating blockchain into existing financial systems. Tokenization means turning real-world assets like stocks, bonds, and commodities into digital tokens on a blockchain. This allows faster settlements, lower costs, and more transparency. When regulators and institutions start adopting these systems, it creates a huge opportunity for projects that are already compliant and ready to scale. And XRP is one of the strongest positioned assets for this shift. Ripple has been building infrastructure for years. Unlike many other crypto projects, Ripple focuses on real-world applications such as cross-border payments, low-cost transfers, and banking solutions. Their partnerships with banks and fintech companies around the world give them a competitive edge. With Singapore recently approving Ripple as a licensed payments provider, the company can now expand its services to a wider customer base, including banks and fintech firms. Singapore is one of the world's most tightly regulated financial hubs. So, approval, there is a strong signal of legitimacy. Investors should pay attention because when Ripple expands in Asia, it creates long-term structural demand for XRP. Japan is also showing strong XRP adoption. Japanese exchanges have experienced significant withdrawals, and the domestic market remains active with high liquidity. Combined with events like the surging Japanese government bond yields and carry trades, there is evidence that large sums of capital are being positioned strategically, and XRP is in the middle of that flow. The combination of regulatory clarity in Asia, institutional inflows, and reduced exchange supply creates a rare market condition where fundamentals, not hype, start to dictate price behavior. Many people are still thinking of XRP in old frameworks, focusing only on market cap or short-term price movements. That is a mistake. In a world moving toward tokenized assets, XRP's potential market is massive. Even if only a fraction of global bonds, real estate, or other financial instruments become tokenized, the volume of capital flowing through blockchain systems will be enormous. In this context, higher XRP valuations become logical. The key is understanding that XRP does not need every retail investor to hold it for its value to grow. Large-scale adoption by institutions, banks, and governments is enough to create structural demand and scarcity. ETF inflows, exchange withdrawals, and global adoption trends are all working together. The launch of 21 shares XRP ETF talks may seem small, but it's part of a larger picture. Institutions now have regulated, reliable methods to accumulate XRP, and as more ETFs come online, more capital will flow into the market. Combined with billions of XRP being removed from exchanges, these inflows reduce short-term selling pressure and create an environment where long-term investors can accumulate strategically. Even during market volatility, XRP is demonstrating resilience. While Bitcoin and Ethereum face sharp daily drops, XRP continues to attract attention from institutions and global markets. This shows that price is increasingly decoupling from general market panic and more tied to structural adoption and supply dynamics. Investors who focus only on short-term charts may miss the bigger trend. Understanding these fundamental drivers is crucial for making professional decisions instead of reacting emotionally. In summary, Ripple is entering a stage where adoption, regulation, and infrastructure intersect. ATF inflows, shrinking exchange supply, and strong regulatory approvals in Asia and elsewhere are laying the foundation for XRP's next growth cycle. Daily market noise may be scary, but the structural signals tell a clear story. XRP is becoming a strategic asset for a tokenized global financial system. Those who understand this are already positioning themselves ahead of the majority of the market. One of the most important trends happening right now is the potential for a true XRP supply shock. With billions of XRP being removed from exchanges and large institutional players accumulating through ETFs and custodial solutions, the amount of XRP available for immediate trading is shrinking rapidly. When supply decreases while demand continues to rise, the market begins to shift fundamentally. This is not just short-term volatility. This is a structural change that creates an environment where price discovery is determined by real usage and adoption rather than speculation. Anyone paying attention can see that the balance of supply and demand is moving in XRP's favor, and it could lead to significant upward pressure over the coming months. Institutional strategies play a big role here. Unlike retail traders, who often react to price swings emotionally, institutions are accumulating XRP in ways that reduce short-term sell-term pressure. Large withdrawals from exchanges show that whales and custodians are securing XRP for long-term holdings. At the same time, ETFs like those from Franklin Templeton, Bitwise, and 21 Shares allow institutions to buy XRP through regulated channels without touching the public exchange market. These combined actions tighten supply while simultaneously building a strong base of long-term holders. This is the kind of strategic accumulation that can lead to meaningful price increases without creating artificial pumps. Another important factor is that XRP is uniquely positioned compared to other cryptocurrencies. While Bitcoin and Ethereum are widely adopted and popular, XRP has been specifically designed for settlement and cross-border transactions. This gives it an advantage in environments where institutions need efficiency, low costs, and regulatory compliance. With Singapore expanding Ripple's payment license and Japanese institutions actively using XRP, we are seeing real-world adoption that is often ignored by people focusing only on price charts. Real adoption creates lasting demand, and that is why long-term institutional accumulation matters more than short-term trading. It is also critical for investors to understand the role of leverage and risk in today's market. Massive liquidations of leverage positions have created panic in the short term, wiping out hundreds of millions in Bitcoin and other cryptocurrencies. Retail traders who attempt to time the market often suffer during these events, while institutions take advantage of the volatility to strengthen their positions. The lesson here is simple. Short-term swings do not matter as much as long-term fundamentals. XRP's reduced liquidity, growing ETF inflows, and real-world adoption create a foundation that is far more important than any single day's price movement. For average investors, the best approach is to think like professionals. Instead of trying to predict daily price action, focus on understanding supply trends, institutional behavior, and regulatory developments. Look at how much XRP is being removed from exchanges, how ETFs are performing, and where global adoption is increasing. This is how serious investors approach the market. They study the fundamentals, identify structural trends, and act with discipline. Retail panic often creates opportunities for patient investors, and XRP's current environment is a prime example of this dynamic. Finally, it's important to recognize that XRP is entering a new phase. This is not another speculative cycle driven by hype or social media. This is a market shaped by regulatory clarity, institutional adoption, supply reduction, and real-world utility. When supply is tight, demand is growing, and adoption is increasing. It creates a scenario that can lead to sustained growth. Short-term volatility may continue, but the long-term picture is becoming clearer every day. For anyone willing to study the trends and remain patient, the next few months could be highly significant for XRP and its position in the global financial system. But it requires understanding the broader context. Many people ask, what will XRP price be tomorrow? Or will it reach $750? These questions focus on short-term speculation, but the real story is about structural growth and adoption. XRP is not just a speculative asset, it is becoming a strategic tool for financial institutions, banks, and global payment networks. When the world moves toward assets and faster settlements, XRP is positioned to be at the center of that ecosystem. Its value will increasingly be determined by real-world utility, regulatory acceptance, and institutional demand rather than hype or short-term trends. One of the most significant drivers for XRP in the near future is continued ETF expansion. The launch of the 21 shares XRP ETF, combined with existing products from Franklin Templeton, Bitwise, and Gayscale, provides multiple channels for large-scale institutional accumulation. These ETFs allow investors to gain exposure to XRP without dealing directly with exchange wallets, which reduces short-term volatility and supports steady long-term growth. Every new ETF adds credibility, increases liquidity, and brings more capital into the system. For professional investors, this is exactly the kind of environment where disciplined accumulation can produce substantial returns. At the same time, exchange liquidity continues to tighten. Since February 2025, billions of XRP have been removed from exchanges globally, leaving only a fraction available for immediate trading. With major U.S. exchanges nearly empty and Asian exchanges holding most of the remaining supply, the market is experiencing a structural scarcity that has not been seen before. Reduced supply, combined with growing institutional demand, creates natural upward pressure on price. This is why some experts are talking about the potential for a supply shock where demand far exceeds available XRP, pushing the price higher even without retail FOMO or hype cycles. Global adoption trends also continue to favor XRP. Singapore's approval for Ripple's expanded payment license, the active use of XRP in Japanese markets, and continued interest from South Korean exchanges show that the coin is being integrated into real-world financial systems. This is not just about trading on a chart. It's about becoming a functional asset that facilitates faster, cheaper, and more efficient cross-border transactions. Real adoption creates long-term structural demand, and that is a key difference between XRP and most other cryptocurrencies. Investors should also pay attention to broader market cycles. Crypto markets naturally go through phases of hype, correction, and consolidation. Today's sell-offs in Bitcoin and altcoins are part of a normal cycle, and they do not diminish the importance of XRP's structural growth. Professional investors know that periods of volatility are opportunities to acquire assets at better prices. The key is patience, discipline, and understanding the bigger picture. XRP is currently in a phase where institutions are accumulating, exchanges are reducing supply, and adoption is expanding globally. These are the conditions that create long-term growth opportunities. In conclusion, XRP is entering a phase of structural strength that few investors fully appreciate. ETF inflows, global adoption, regulatory clarity, and reduced exchange supply are combining to create a market environment that is highly favorable for long-term holders. Daily volatility may continue, but it should be seen as a short-term noise rather than a reason to panic. For anyone looking to position themselves professionally in crypto, understanding these fundamentals is critical. XRP is no longer just a digital asset. It is a growing infrastructure component of the global financial system. Staying informed, patient, and disciplined is the smartest way to navigate the current market and capitalize on its potential.